Good morning, everybody. It's Thursday, September 5th, 5:25 a.m. Central Time. Grain market's just a little bit lower this morning. December corn futures down 1.5 at 4.11 and a quarter. November soybeans down 6.5 at 10.15. December Chicago wheat down 6.5 at 5.74 and a quarter. December Kansas City wheat down 3.75 at 5.89 and a quarter. December spring wheat down a quarter cent at 6.23 and a quarter. Let's start off with this multi-day rally.
So corn, soybean, and wheat futures rallied on Wednesday. New crop corn and soybean futures have closed higher in 4 consecutive sessions, while Kansas City wheat futures have closed higher for 6 consecutive sessions. Fund traders continue to cover short positions amid U.S. farmer selling that may have been reduced following last week's first notice day. The December 24 corn contract rallied 29 cents from last week's low to yesterday's high. The November 24 soybean contract rallied 70 cents from its August low to Tuesday's high, and the December 24 Kansas City wheat contract rallied 67 cents from its August low to yesterday's high.
It appears obvious that we have some short covering here among large money managers or fund traders. Because CFTC lives in 1997, we get outdated data, and we don't know exactly where they stand in real time. The way that it looks right now, the funds in real time are probably short 190,000 contracts of corn. That position peaked at 356,000 contracts back in July. So the funds have been able, if this is correct, the funds have been able to cover 160, 170,000 contracts worth of net shorts in the corn market without really moving prices a ton. And that's because there was so much old crop corn that needed to be sold in July and in August. And now that first notice day has passed, you've got a little bit of an uptick in soybeans. The net short that the funds are holding estimated at 128,000. That number peaked at 183,000 back in July. So you've absolutely seen some short covering. So what is causing all of this? Is it simply just short covering or technical buying, or the idea that a harvest low has been posted? Maybe it's some of those things. We've also got improved demand. There was a bunch of chatter circulating this week about soybean cargoes being sold to China. I believe that to be true. It's very normal and routine stuff for this time of year. In addition, we had some heat at the end of August, and there are people out there who believe that the heat may result in reduced yields, especially for soybeans, maybe for corn also. You've got a drought story in Brazil. We're going to get to that in a second. You've got a drought story in Ukraine and also parts of southern Russia as it relates to winter wheat. We'll get to that in a second. The factor that concerns me moving forward would be this. I believe that the U.S. farmer is undersold when it comes to new crop corn, new crop soybeans, and the environment that we sit in right now. High interest rates, big carries in the market, farmers that are short of cash in a lot of situations relative to prior years. I can't help but wonder if farmers selling out of the field is going to be a little bit more aggressive this year, and if that results in another leg down at some point. I hope that's not the case, but we know that these higher interest rates especially are very, very restrictive when it comes to storing corn, soybeans, whatever. It makes it, the high interest rates paired with the carry in the market and potential storage costs, it makes storage very, very difficult. You're fighting an uphill battle when it comes to that. I'm not saying it can't work, but you need a hell of a rally to make storing anything for multiple months make sense. So there's a lot of things to consider here, guys. A lot of things to consider.
Record soybean production is expected in Brazil this year. According to well-followed private group Ag Rural, the crop is estimated to reach 168 million metric tons, up 14% compared to last season. Soybean planting typically begins this month, but dry conditions are causing planting to be delayed. The forecast is calling for dry weather through mid-September. Ag Rural also reported that Brazilian soybean acres are expected to expand by 0.9% this season, the slowest pace in nearly 20 years. The Brazil's soybean area is anticipated to reach 114.7 million acres.
The headline here is about acres and the slowest expansion in 18 years, but they're still expanding. They're not contracting. They're still expanding. There's a little bit of a discrepancy between Ag Rural and USDA when it comes to expected acreage. I think it's 1.5 million or 2 million acres. The big thing right now is not, well, I guess it could be acres, but it's dry in Brazil, and there's not any rain in the forecast during the next 10 days for these key soybean growing areas. What I did notice in this morning's GFS which goes out 16 days through September 21st, is that it hints at some rains returning to these central parts of Brazil and your key soybean growing areas. And if that were the case, if the rains were to return in late September into early October, that would be totally normal. That would be totally normal. That's what happens year in and year out on average. What would be abnormal would be the failure of these rains to return. So some of the action in the soybean market could very well hinge on whether or not these rains do in fact return later this month and into the first part of October. And here's the side by side. So you can see like these areas that are dry, like your Mato Grosso, your places surrounding that to the south and to the east, are very dry and drought stricken. The South has been better off. They had flooding last year, and they've had some more rain in the forecast. But yeah, that's one thing I'd be watching is this extended GFS. Does it continue to push this idea forward and further east with these rains here toward the end of the month? That's going to be something that I think traders will be paying attention to.
So if you guys haven't checked out our premium content, you sure need to do so. Joe, can you tell me about yesterday's premium video with Matt Bennett?
Matt was on yesterday. This is the $1 million or perhaps multi-million dollar question for a lot of you guys watching. Off the combine, sell or store. There are more, kind of as I alluded to earlier, there's a lot more to consider when taking this decision into account. Should I sell or should I store corn and soybeans out of the field? There's more to consider than just, is the market going up or down? It's a lot more complicated than that because there are interest rates involved, storage costs, cash flow needs, that sort of thing. It's much trickier. Carry in the market, it's much trickier than just like, hey, are we going to rally 20 cents or are we not? There's a lot more to consider. Matt and I discussed this at length yesterday. If you guys want to see the premium stuff, go to standardgrain.com. You can sign up this morning. It's a $50 per month subscription. You can cancel at any time. No other fee, no other obligation. Nobody will try to sell you anything else. Just a ton of info direct from us every single business day. Our morning email goes out at 5 a.m. Central Time. It includes our normal kind of grain market rundown, plus all of our premium videos or our 6 most recent premium videos every single business day. Give that deal a shot this morning, guys.
Estimates for U.S. corn and soybean yields have slightly increased. Well-followed private group StoneX increased its forecast for this season's average corn yield to 182.9 bushels per acre, up from 182.3 bushels per acre in its previous report. Corn production was lowered to 15.1 billion bushels, down from 15.2 billion bushels. The group raised its estimate for the U.S. soybean yield to 53 bushels per acre, up from the previous estimate of 52.6 bushels per acre. Soybean production is projected to increase to 4.6 billion bushels, up from 4.5 billion bushels.
I understand that this is a customer survey, but what you'll notice about estimates from private groups this time of year is that they don't stray too far from USDA. USDA has its corn yield penciled at 183.1. Stone is at 82.9. I mean, they're very close on soybeans, within 0.2 of a bushel. You're not going to see, in all likelihood, you're not going to see the private groups stray very far from USDA at this point in time. That's not to say that that's correct, because there are people out there who believe that, again, the heat in August, especially as it relates to soybeans, caused some issues and some damage and some reduced yield potential. And that may be true. We'll find out. We may find out a little bit later than we'd like to, though.
The Mississippi River is experiencing low water levels for the 3rd consecutive year. Numerous barges have run aground over the last week due to the situation. Restrictions have been put in place to limit the number of barges that can pass through the river and the amount of volume that they can carry. Barge rates have spiked, making U.S. grain exports less competitive on the global market. Last October, the river gauge at Memphis, Tennessee fell to an all-time low of negative 12 feet. Memphis's water level is currently lower than it was at the same time last year and is expected to drop to negative 7.5 feet by mid-September.
Yeah, so we're already in restrictive territory, and this goes back to what I mentioned earlier. The chatter regarding China and soybean cargo, some of it was supposedly out of the Gulf, which would make sense. But if we get back into this restrictive situation, that's not a positive, especially as we approach what is our kind of key time slot when it comes to soybean exports, really like harvest time through the end of the calendar year and into January a little bit. That's prime time U.S. soybean shipping season. So to see restrictive water levels on the Mississippi this time of year is not a positive by any stretch of the imagination. And it could make U.S. beans non-competitive. It's going to increase costs, shipping costs, could present basis problems in the interior and elsewhere. So we need this to change, and it's not going to change There's no rain in the forecast. You look at the next 7 days, no rain there. Go out to the 21st. This is the extended GFS. There's no rain there either. So this is going to get worse before it gets better.
Drought concerns are growing in Ukraine. Farmers have begun planting winter crops despite extremely low soil moisture. Recent months of hot and dry weather have caused drought conditions to spread across 60 to 70% of the country. Ukraine harvested 21.8 million metric tons of wheat during the 23-24 season, down slightly from 22 million metric tons in the previous season. The USDA is estimating this season's wheat crop at 21.6 million metric tons.
So wheat futures are on a winning streak here, which is nice to see. I haven't seen it in a while. Here's a good map from our friends at World Weather. Ukraine is very much drought-stricken, and parts of southern Russia also. They plant wheat in Ukraine and Russia, winter wheat this time of year. It's August, September into October in some places, and they're very dry. There's not much rain in the forecast. Maybe some of your far southern areas will catch some rain here over the next 10 days, but beyond that, just kind of scattered, minimal amounts. So this could be absolutely part of the reason that we've seen some strength in the wheat market. I think a lot of it has to do with general row crop strength and just some repositioning among large money managers, but this absolutely could have something to do with it. What did cattle do yesterday?
Cattle futures were mixed. Live cattle were down 82 cents to 45 cents higher. Feeders were down $1.87 to 47 cents lower. Box beef was mostly unchanged yesterday. Choice ended the day at $311.60. That was up 93 cents. And select ended the day at $299.39. That was down 72 cents.
Outside market's pretty quiet. U.S. dollar's about flat. Stocks are up just a little bit. Bonds are flat. Gold's up $17. Crude oil is up 18 cents in the October WTI at 69.38 last trade. Have a great day, guys. We'll talk to you on Friday.